Isn't that strange? Apparently the insiders and the team of Mantra haven't sold any tokens. Apparently the early backers, the venture capitalists, also haven't sold any tokens. How is it possible that the chart looks like a rug pull, that we are down 90% in a day, and apparently nobody has sold? Over the span of the last week, Mantra went down by more than 90%. And the second largest loser, EOS, only lost 20%. The week actually had been quite positive. Most alts are up. But here's the long-term chart of OHM, right, of the Mantra token. Since March of 2021, we are still slightly up by 40%, but relative to Bitcoin, we are already down. Mantra slightly lost 10%. And this is of course the recent crash. From top to today's price relative to Bitcoin, we lost 92%. And the news really make no sense. So Laser Digital, which is a venture capitalist by Japanese bank Nomura, denies any involvement in the crash. Here are the wallets that are associated with Laser Digital, and none of them have executed any token sales. The team also says that nothing got sold. So the Mantra CEO says that Arkham, which is a blockchain analytics company, mislabeled the wallets. We know which wallets sold and which wallets sent the tokens to centralized exchanges, but we don't know who owns those wallets. On Mantra's Twitter, we see that the team denies any involvement in that crash. And it's all just reckless liquidations, whatever that means. Well, here is what that might mean. When we've got a token that's not traded that much on chain, but mainly on the centralized exchanges, we tend to see a lot of price manipulation happening by the market makers. We have seen something very similar for Telor, or the TRB token. This channel also covered Telor and warned about it before the crash. But here's what happened, right? We went from $200 all the way down to $50 in a matter of just a few weeks. The volatility can also go the other way around. So we had a short squeeze recently with Onyx Coin, or XYen. Now, I tend to bet on falling prices in this market, and most altcoins long-term do underperform Bitcoin most of the time. And yes, I got caught in this short squeeze as well. I was betting on falling prices of Onyx Coin, and then the price kept rising and rising until the short sellers gave up, myself included, and now we're just stabilized at that higher price level. At one point, we are likely going to deflate again, very similar to what we've seen in prior short squeezes. It's not that easy to find the perfect top during manipulations like this. But here's the problem with the Mantra network. It's not really clear how much usage there actually is. According to DeFi Llama, we've got only 4 million of total value locked. And that's under the background of a market cap of 588 million. That's not healthy. And here is what's causing price volatility like this. It's usually the perpetual futures. So it's the bets on the price, the levered bets, where the whales closely monitor what retail is doing. And when enough retail investors are betting on falling prices, the price gets squeezed to the upside. When enough people are betting on rising prices, then the token simply gets sold at the centralized exchange, the way we've seen this with Mantra. Now, I think the real world asset narrative is currently overblown within crypto. Yes, at some point we might be able to buy the S&P 500 on chain, or we might be able to buy a skyscraper in New York, again tokenized on chain. But currently we are very far away from this because of regulatory concerns. And so right now it's mainly hopium that's getting sold. There are real world assets that are being used on chain, but it's not what most people think is the focus. More on that in a second, but just have a look at this overview on CoinGecko for real world assets. Chainlink is at number 1, but Chainlink is not really a real world asset play. It's mainly a data oracle. So it provides data from external sources for the blockchain. Stellar is also not necessarily just focused on real world assets. Ondo to a degree is though. And then we've got already our first stablecoin. And this is what we get to in a second. Here is the actual usage of real world assets. It's mainly just fiat money. So it's the stable coins. When you send your fiat currency to a centralized exchange, and the centralized exchange sends this to a stablecoin custodian, like Tether or like Circle, and then the equivalent number of stablecoins get issued on the chain. Then we've got a real world asset, the US dollar, getting used on chain. And that is pretty much most of the usage. That's this orange area over here. Fiat collateralized stablecoins. It's a $142 billion market. When we take that away, we've only very little usage of real world assets. So after the stablecoins, we've got government securities, or in other words, bonds. And then we've got commodities. What kind of commodity? It's of course gold, right? We've got PEX-G and we've got Tether Gold. Everything that comes below that is extremely small. Again, stablecoins were more than 100 billion worth. Here we've got just a few hundred million. So 0.1% or 1/1000th of the usage. Yes, real world assets could come at one point, but first we have to see how BlackRock actually makes that happen. I very much believe that especially for index funds, like let's say the S&P 500, VOO, that this could come on chain. For individual stocks, it's not that easy because their insider trading applies. Are we going to see individual properties on chain? It's also unclear, right? Probably we first see funds, right? Let's say commercial real estate funds that could be traded on chain. Again, right now it's mainly the stablecoin market that's driving all of the real world asset adoption. And here is the stablecoin market cap across major players. So we've got DAI plus Tether plus USDC plus BUSD. And this tends to shrink when money is flowing out of the crypto market. And it tends to go up when money is flowing in. Now, in the last few days, we didn't see that much more expansion. In the last 3 weeks, we just went sideways. And if we do that for long enough, we have the potential to turn into a full-blown bear market. That's what happened in May of 2022 when Terra Luna collapsed. To me, it looks like the market is clearly cooling off. And even the people that are within crypto, they tend to rather sell the risk on assets. So while this is the stablecoin market cap, this here is the stablecoin dominance. So how much of all of crypto is currently in stablecoins? This peaks at 19%, is currently at 8%, and it bottomed twice at 5%. And I do believe that we're likely going to see further cooling off. And there is an inverse correlation between the stablecoin dominance and crypto prices. So when this is low, then crypto prices are high. When this is high, then crypto prices are low. I also believe it's likely that the Bitcoin dominance will continue to rise. Altcoin season or Bitcoin dominance crashes only happened historically when Bitcoin dominance was close to 70%. Currently, we are only at 63%. If we stay with the current pace, it will take until the end of the year, potentially beginning of next year, until we see the altcoins outperform again. Nobody, of course, knows the future, but there are some approaches that historically work pretty well. And that's the best we can do, right? We can just use the things that worked well and hope for this to continue to work well. Now, no model is perfect, but some models are useful and we can just combine various models. That's what the CBBI is doing. So we've got various models like the Pi cycle top indicator, or the realized profit and loss, or the realized HODL ratio, or the market value to realized value z-score. We talked about several of those indicators in individual videos on this channel. And this is how that looks like. It peaks very close to 100 when also the price ends up peaking. And it tends to bottom also at the bottom of the bear market. And it looks like we are currently cooling off and we still have a long way to go further down. Historically, Bitcoin crashed way more. And I think it's problematic to be too bullish. Very often we've actually seen this, right? We saw how Bitcoin rallied, made a first peak, then retraced again, made a second peak. We've seen this here as well, a peak, a retracement, a second peak, and now we are again at a peak, a retracement, a second peak. It wouldn't be surprising to see the beginning of another bear market. That's at least how I am set up. It's also how the community here is set up. The shorting channel is the most active one right now. People are looking for short opportunities. And of course, since most of the time altcoins are now underperforming, those kinds of shorts make nice gains, especially when applying some leverage. Now, most people are more than happy to share the wins, but are not happy to share the losses. And that brings a very unrealistic picture of what kind of long-term gains are actually possible. I want to share my data here. So what we've got over here is the monthly alpha over buying and holding Bitcoin. So every data point here shows how much more money or less money did I make compared to just holding Bitcoin. This dotted line is the 12-month moving average. And we've got 41 data points. And when we average out all of those data points, we come to 2.3%. So every month on average over the last 3.5 years, I have made more than 2% outperformance. But of course, there is volatility. And this is what most people don't tell you. Most people are also afraid to share those very long-term charts. Now, I'm also dollar cost averaging into my trading portfolio at the same time. And so recently with the crypto crashes, I had very nice outperformance, but I'm basically hoping for another doubling of that portfolio within the next 2.5 years, roughly. And so that's the art in this game, right? We want to make nice gains with individual trades, but we never want to get wrecked. We still want to manage our portfolio risk properly, especially when the portfolio is large relative to regular income. Because if you've got only 2 or 3 months of your income in crypto, then of course you can take on more risk. But if you've got several years of your income in crypto, then it's important not to crash by 60 or 70% just because of some meme coin speculation. I also think that it's actually easier to make money during bear markets like this. Because in a bull market, we have to find the few outperformers, right? We have to find the few altcoins that make 10x returns. And that's not always easy. But in the bear market, most altcoins underperform most of the time. And so because of that, the odds are in our favor. We simply have to avoid the very risky token. And so don't make the mistake that I did and start shorting a token that's currently in the process of a short squeeze. You want to only short those tokens when they already start deflating. But yeah, that's probably good content for another tutorial video. I've now made more than 100 of them, and it's experience over time. It's also mathematically backed. It's about shorting altcoins. It's about relative valuation shorts. It's about managing risk, portfolio allocation, also on-chain analytics, etc. I'm also sharing my own trades. I'm sharing my views on the market regularly in Premium. There's a new video every 3 to 4 days exclusively for the members. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't like Premium, just message me within the first 7 days and I'll refund you. Looking forward to seeing you again over here. A like would be very much appreciated as well. See you next time on YouTube or see you in Premium. Cheers.